Why, yay, everybody, and it's me, your favorite rate slayer, Buffy, and I'm back with the third episode of the May 2022 Weekly Market Insight Series, directly from the Capital Markets Trading Desk at SunWest Mortgage Company. So, what did we hear this week, you said? Well, Fed Chair Powell most hawkish comments. He roared that the Fed will keep raising rates until there's clear and convincing evidence that inflation is in retreat and won't even hesitate to tighten policy beyond neutral to curb the high inflation. Moreover, heightened geopolitical tensions with Russia continue to result in severe energy shortages, worse consumer confidence, and dampened growth. Investors are worrying that inflation could spike further and remain elevated for longer if energy shortages worsen. Meanwhile, the concerns of policy support removal and stretched valuations is providing a challenging backdrop for the U.S. equities. Stocks finished mostly lower, continuing their slump from last week. The U.S. also hit another grim COVID milestone this week, with COVID-related deaths topping 1 million. While safe haven demands did push treasuries higher this week and brought back treasury yields across the board as investors sought insurance against further declines in risk assets, with the Federal Reserve set on taming inflation via rate hikes and a shrinking balance sheet beginning in June. So, what else did we uncover by the market this week? New York Fed President and influential FOMC member John Williams said on Monday that inflation remains the number one concern given that it is running far too high and persistently, and the Fed is committed to bring the economy back into balance. However, the question is, did this rising inflation stop customers from shopping? Evidently no, not at all. U.S. retail sales grew at a solid pace in April, suggesting that the demand for merchandise remains resilient despite rampant inflation. The value of overall retail purchases increased 0.9% after an upwardly revised 1.4% gain in March, Commerce Department figures showed on Tuesday. Applications for U.S. state unemployment insurance unexpectedly rose last week to the highest level since January. Initial unemployment claims increased by 21,000 to 218,000 in the week ending May 14th. Now, let's see what's happening in the housing market amid ongoing supply-side challenges and the continuous climb in mortgage rates in decades. The MBA mortgage applications index fell 11% in the week ending May 13th after rising 2% in the prior week. Refinance fell 9.5% after falling 2% in the prior week and were down nearly 76% year-over-year basis. Housing starts, an economic indicator that reflects the number of new houses on which construction has been started in a given period, slipped in April. Residential starts decreased 0.2% last month to a 1.72 million annualized rate after a downwardly revised 1.73 million pace in the prior month. However, U.S. factory production rose at a solid pace for a third month in April. Federal Reserve data showed a 0.8% increase in April 2022, followed by a similar gain in March. Whereas sales of previously owned U.S. homes fell in April to the lowest since June 2020. Contract closings for the home sales decreased 2.4% in April from the prior month to an annualized 5.61 million. Let's wrap it up. The central bank increased rates by 0.5 percentage point earlier in May, and the Fed chair at the time suggested that similar moves could be on the table in June and July. Moreover, as we can see, investor sentiment is fickle, and markets are likely to remain choppy until we get greater clarity on the 3 R's: rates, recession, and risk. Let's see what's on the table in the coming days, guys, and that's all I have for you this week. Join me again, please, for our market updates. Figures on various important economic data, updated status on geopolitical nervousness, and much more. Stay updated with our news, and our trading desk will keep you informed with our pricing incentives. Have a happy Friday, folks. It's the weekend. Buffy's out.